Welcome to TradeTheMBI.com. This is John. This report is for the 29th. A little bit of a pullback after new highs. And again, this is just that slow ebb. Of course, Trump is overseas in his victory tour, and the EU, caved into him because they had no choice. We knew this already. It was pretty obvious with the direction that things were going. And the same thing for the UK. Not much else to add. Of course, this completely destroys the narrative. We've got a lot more data coming in this week that is really going to start to confirm that all of these bizarre creations that they had about where things would go economically with tariffs and that is going to be wrong. But what are you going to do? You get signed under red. It, yeah, exactly. And it's like you can remain speechless because as long as that remains that way, it's going to continue. The degree to which it's going to be this soft move is just going to continue simply because it's a little bit harder to drive to the upside compared to how easy it is for things to move to the downside. Now, of course, there's all positive extremes. So, yeah, it's all going to get filled back in. So, that we know. It's just a question of the timing. And from a Nasdaq standpoint, look at this, much cleaner even than the S&P with the magenta clearly above yellow. Though you do now, finally, for the first time, have MBI White there over 10. So you've set the stage, and we're getting a pretty close squeeze right here. So the Nasdaq could be our leader as far as the retrace goes when it does take place. Still, everything's congruent, but the point being said there is that we can see, unless you get a strong rejection of green to the upside and cyan to the low side. That would be the only way you would have the significant short move at this particular case. You could have still reset of steel. So you've got your short-term buyers, and particularly at the beginning of next month, that's going to start up again with new money coming in. Where's it going to go? You put it in the bond market? Not likely. Crypto market? No. Treasuries? Forget it. See, I mean, stagnation going across. Now the Fed having to cut, that even makes this potential yield beneficial because the market is already signaling that they need to, and it's becoming really kind of strange that they haven't. None of the narrative that they've been selling has worked. The biggest problem continues to be this one, and we talked about this when Trump first came in, that the roadblocks that had been set up were going to be very difficult to overcome and take a long time, and it hasn't changed. And so that's, you're not even going to see relief in this until sometime middle next year. The only thing we would have seen is if there was a significant economic downturn, you probably would have seen oil lower, but we're not seeing that effect. And with the new potential investment and everything else that is going to be piling into the U.S., may not even see that kind of a dip at all because that certainly is going to sustain it. And as I've said, the removal of immigrants and things like that from the country is also a deflationary effect. Even if you had higher prices for certain things, uh, it would be stabilized there because it lowers wage pressure, lowers rent pressure, so that causes prices overall to decline in that. And here's a shocker: is the euro. So even from that original, nice little bounce there, we filled in the positive extremes from the initial move, and no surprise. I mean, this is a long way to go to the downside for the euro, given this, because they're going to be impacted the most from the trade deal, and then they also have to buy energy and invest monies. So they're it'd be interesting to see if they can even do it because I don't even think they have the money to do it to beat the commitment that they've made. From a gold standpoint, yeah, none of that is strong from a gold standpoint. The interesting one will be when we start to get deficit numbers. And that will tell us a lot as to how those changes are really impacting the borrowing needs. It'll be interesting because they expect a pretty decent sized deficit coming through for July. And what if it's not? It'll be interesting. Bitcoin standpoint, it's just been holding steady here, absorbing those gains. So it's fairly healthy. And ETH continuing to build on the momentum from the positive actions from a legal standpoint, at least from a congressional everything else. So we had the buy come through, but then pretty quickly Magenta faded. Then we had MBI white, and that led us to a move down to the 50%. Magenta took back over, so that prevented any further dip in that move. But you can see it was all steel reset from the beginning of it. So any dip was going to be short lived. And that's always the important one to watch for, because when you do have that steel always underneath, it's when the steel is riding up above and you have cyan leading, then you know you're in for a much deeper cascade. Intraday, though, you can see we started out, everything was fairly decent, but then it was just successively lower highs, and then at the end of the day they pushed it back up. And so again, this becomes your option trade window that goes back and forth. And here you can see in the post market they've already driven it back up, and European session is blah. That's the long and the short of it for now. As we get closer to the end of the month, we'll probably see a little more fireworks, but all in all, fairly decent. And we'll just start to look at some of the new economic numbers and see the direction things are heading, and that should spell out where we'll be for the first part of next year. And that'll be helpful. Anything relevant, I will put it on the team chat. Have a good one. Trade well.